Right, everyone. Welcome back to another Cryptopolitan live stream. If you've been watching the market over the past couple of weeks, you already know this. Things have slowed down a lot, and I mean quite a bit. Ever since the major correction we saw at the start of the month, Bitcoin and the broader crypto market have been stuck in this sort of consolidation zone now. The total market cap has basically been bouncing between roughly 2.43 trillion on the upside and around 2.2 trillion on the downside. Now, for almost 2 weeks, there's no conviction, there's no real expansion happening, and ultimately, markets don't like this sort of indecision. Now, in last week's stream, we walked through some of the downside scenarios for Bitcoin. I still believe those are very, very much in play. Nothing structurally has changed in my view. So, if you haven't watched that episode yet, I genuinely recommend going back and checking it out because the framework that we laid out still matters for what's happening right now. But let's get back to today and let's just call it what it is. Price action has been extremely boring. It's just been chop. There's been slow grinds. There's been fake outs, and when the market goes quite this way, sentiment tends to deteriorate. You can feel it. You can feel it across crypto right now, on Twitter, on YouTube, even among long-term holders. There's this low-level frustration that's just brewing. Uh, And if you want a simple way to measure that, just look at the crypto fear and greed index. Crypto sentiment has now spent 22 consecutive days in extreme fear. And if we look at over the past, 30 days, we've been in extreme fear territory for roughly 73% of the time. The remaining has been in fear. Not once, not even briefly have we touched neutral, let alone uh, greed. Right? We haven't even come close there. Uh, so this isn't just a sort of one day spike in panic anymore. This has been persistent, and that matters because when fear stays this elevated for such a long time, it starts affecting how people think. It starts shifting the narrative altogether. Now, the fact is, this level of fear isn't just about price. Of course, the correction hurts. Drawdowns always shake out the weak hands, and in general, confidence just goes out of the window, right? But if you scroll through crypto Twitter right now, you will notice something subtle happening. There's this growing conversation about whether crypto and more specifically Bitcoin is going through some kind of identity crisis, right? Whether crypto has actually lost its original mission, which almost seems like a existential problem. And when the market starts asking these sort of questions, that's when confidence has been completely shaken out. Now, spoiler, I want to be very clear here. I don't think crypto is broken. I definitely don't think Bitcoin has lost its identity. But I do think something has shifted. And if you don't understand that shift, this phase will definitely feel extremely uncomfortable. What we're experiencing right now isn't necessarily a structural failure. It's more of a transition that we're seeing, right? Crypto today is extremely different from crypto in 2017, different from 2020, and even quite different from 2022. The market structure has evolved. There are new participants. The liquidity drivers have also evolved. And I would say most importantly, crypto is now more macro driven than ever before. For years, people like to think of crypto as a separate universe, detached from traditional finance. immune to what's happening, outside of the macro. But that's not the reality anymore. We have institutions, we have spot ETFs, we have global liquidity influencing demand. We have treasury allocations as well. So crypto in general has grown up, and when an asset class grows up, it becomes way more intertwined with the global financial system. That means when macro is uncertain, like it is now, crypto feels it. When capital or liquidity tightens, crypto feels it. And ultimately, when there is uncertainty, the risk appetite drops, right? So part of what we're seeing right now isn't an identity crisis, it's the growing pains of becoming a macro asset. Now, here's the issue. Not everyone has sort of had this mindset shift yet. A lot of people are still evaluating crypto through the old frameworks, right? Through previous cycle behavior, uh, through the halving only sort of logic, right? And when price doesn't behave according to those expectations, of course, doubts creep in. So that's where we are right now. Uncertainty in price, fear is constantly, it's driving the market. Uh, and then there's a lot of macro crosswinds as well. So in today's stream, I want to tackle this head on. First, I'm going to unpack why this feeling of an identity crisis is even there right now. Then we're going to zoom out and talk about the real macro factors or the external factors that's weighing on crypto as a market. And finally, we'll close by talking about how, as an analyst or as an investor, you can actually approach this market um, in a sound way. Okay, so let's start with this whole idea of an identity crisis. For years, Bitcoin has been marketed or understood as digital gold, a hedge, a store of value, something outside of the system. But over the past year, and especially during this recent correction year to date, Bitcoin hasn't consistently behaved like that. As we see geopolitical, issues arise, we're seeing gold rally. We're seeing, when inflation fears are spiking, gold again catches a bit. When markets wobble, we're seeing gold and assets like silver as well have responded. But Bitcoin hasn't. Instead, what we've seen is the reverse. Bitcoin is trading much more like a high beta risk asset. It moves with liquidity, it moves with equities, and it's moving a lot the dollar as well. Right? Something very fascinating also caught our eyes is its correlation with software and high growth tech stocks. Now, this is from a very recent report released by Grayscale. If you actually overlay Bitcoin with software indices or major growth names, you can see the similarity in structure. Drawdowns align, rebounds align. So, this is not digital gold behavior in a sense. This is basically showing that Bitcoin is a lot more of a duration sensitive, liquidity driven asset class. And that mindset that creates friction, because if Bitcoin is digital gold, why is it trading like this? Why is it trading like a software stock? And if it's trading like a software stock, then what exactly makes it different? So that tension between what people thought Bitcoin was and how it's behaving is a big part of this whole identity debate that's happening. Now, here is where I want you all to pay attention, because there's a nuance. Correlation doesn't mean identity. Just because Bitcoin is moving like software stocks in the macro environment doesn't mean that's what it permanently is going to be. It means it's reacting to the same dominant force at this point in time, which is liquidity. But when real yields, you know, when they rise, long duration assets suffer. Software stocks will start to feel it. Growth equities feel it. And Bitcoin, which is a forward looking asset with no sort of cash flows, feels it too. Right? So that's the sort of macro mechanics behind it. But if you entered crypto right now and you thought it was completely detached from that system, this behavior feels confusing, even disappointing, and that confusion is being labeled as an identity crisis, I think you have to zoom out, right? You have to zoom out beyond Bitcoin. There's there's a general sense of frustration across the ecosystem. Some people feel crypto has drifted too far into speculation and away from utility. Others are arguing that some real adoption is happening, but the price isn't reflecting it. There's another camp as well which believe innovation is strong, but capital isn't actually flowing properly. But, and here's the really important point, the asset class has just evolved structurally. Institutions, again, the regulations around this entire sector is forming now. Traditional financial rails are integrating as well. But mentally, many participants are still using 2020 or 2017 frameworks to interpret 2026 behavior. So that mismatch that we're seeing, it creates discomfort. It's human nature. People expect halving cycles to play out in a neat and timely fashion. They expect explosive momentum at predictable levels. They expect clear narratives. But as markets mature, cycles become a lot more complex to track. They stretch, they compress. Sometimes they even overlap with global capital flows. So all in all, Bitcoin and crypto is no longer trading in isolation from the world. And that's a huge shift. Now the question is, why is this entire, existential dread happening right now? It's actually pretty simple. Think about it. About For about 2 years now, we've had the excitement of ETF approvals. We've had pro crypto regulations, inflows, the entire narrative expanding. But now we're seeing what happens when macro uncertainty rises while institutions are already here. And instead of blind speculative flows, we're getting that discipline from these big players, right? We're getting disciplined capital responding to global conditions. That's why it feels slower. That's why it feels less explosive. But that definitely doesn't mean it's broken. And I actually think it means we're getting a lot more integrated. So, what looks like an identity crisis might actually be crypto stepping into its sort of next growth phase. One that I would argue, and a lot of analysts would as well, is that it's deeply connected to liquidity, global risk appetite, and general macro positioning. And that phase can be uncomfortable because it removes the illusion that crypto exists in a sort of vacuum. It doesn't anymore. And once you accept that as a participant or an analyst, the current consolidation phase that we're in makes a lot of sense. Now let's zoom out and actually talk about the actual macro forces keeping this market in this very uncertain limbo sort of phase. And you'll start to notice this almost instantly once you step outside our crypto bubble for a second, it becomes very, very obvious that this isn't just a crypto problem. Now, I want to point you all to this chart. We have something called the World Uncertainty Index. It's basically a global macro index that tracks how often the word uncertainty shows up in official economic reports. And this is done across hundreds of countries. Right now, it's at record highs. It's higher than post 9/11, higher than the 2008 financial crisis, and even higher than the pandemic. So let that just sink in. The global economic system is operating in one of the most uncertain times on record. Now ask yourself this. If these huge institutions, global capital allocators, if they're all moving in this kind of uncertainty, do you think they're aggressively allocating into assets that are volatile? Probably not. Right? They're cautious. Like like many of us, they're waiting for clarity. And again, crypto, whether we like it or not, now sits inside that ecosystem. So basically, when we see this chart spiking, when we see global uncertainty rising, it tells us one thing, right? Markets don't like unpredictability. They don't. And we have to just accept that. Now, let's break down what's actually driving this level of uncertainty. Firstly, we have geopolitics, right? This has been all over the news over the past week. We've seen escalating tensions between the US and Iran. Every few days, there seems to be another headline, potential retaliation, military positioning, and ultimately, some energy supply concerns as well. And again, markets don't like this level of unpredictability. And when geopolitical tensions rise, money tends to move into safety, into a safety net. So think of the likes of dollars or bonds, sometimes commodities like gold. Now that's one layer. There is also interest rate uncertainty, where still in that awkward middle ground with central banks, rates are elevated, inflation is sticky in parts of the economy in the US. Growth isn't collapsing, but it isn't booming either. And markets, they're constantly trying to front run the Fed. So if you just look back at all of the news that have come out, every CPI print, every jobs report, every sort of even a Fed whisper, you can literally see risk assets swing on expectations about cuts. So remember what we discussed earlier about Bitcoin's correlation with software stocks? That's not random. That's not random at all. Software and high growth stocks are duration sensitive assets. Their valuation depends heavily on future growth and discount rates. Basically, when yields rise, they compress. When yields fall, uh, they expand. Bitcoin has been reacting in a very, very similar way. Now, I want to be clear here. This does not mean it's just a tech stock, but it does mean liquidity conditions matter more than ever. So, ultimately, what we're witnessing right now in crypto behaving like a macro integrated asset, it's no longer about moving purely on internal narratives. We cannot only rely on news about ecosystem launches or any sort of hype news within our ecosystem. I think it would be wrong to do that. At this stage of the market cycle, we are responding so much more to global liquidity cycles, geopolitical stress, and interest rate expectations. That's ultimately why it feels slower and why it feels more, or rather, it is more correlated with traditional markets. But that doesn't make it weaker. It actually, I think it actually makes it way more embedded. And embedded assets have to respect macro conditions. So I've got this question even over this past week. Why isn't crypto doing anything? The answer here is actually pretty simple because the world isn't doing anything either. The world isn't showing any decisive uh, signals either. We're in a global sort of holding pattern, and crypto is reflecting that. Now, the important question from here becomes, if crypto isn't broken fundamentally, how do you even how do you even approach a market like this? Where do you start? Now, I know approaching crypto right now might seem pretty daunting, uh, can be very tricky, especially given the fact that there are literally millions of tokens out there today, as you can see in this chart. It's just a dynamic that simply did not exist in previous cycles. But the strategy in a market like this can actually be quite simple. All we have to do as participants is go back to the basics. Forget trading every meme coin. Instead, focus on three key pillars. Firstly, would be utility. Does this project or does this network do something meaningful? Second would be adoption. Are real users actually, using it? Risk to reward would be number three. Is the potential upside worth the downside? That's it. That's the key pillars that I would definitely be focusing on, and most analysts would be focusing on right now. And before I go on, I just want to be very clear here. Nothing I mention here is financial advice. I'm just pointing out how many analysts are viewing the market right now. And you absolutely need to do your own research and make your own decisions. But this is a framework that you can follow as well. Now, having said that, the beauty of crypto, unlike any asset class in the world, is that you do not have to rely on promises or some sort of earning report. You can quite literally see adoption and activity on chain in real time. So let's talk about a few networks that, from a fundamental perspective or an adoption lens, it still stands out even when prices aren't trending. Now, the first and most obvious coin, it's going to be Bitcoin. Let's just state the obvious. Bitcoin is still king. Its market cap is the largest. Its network security is unmatched. It has the most brand recognition. None of that has changed just because price is boring. And yes, there are new narratives regarding its risks and quantum computing. And this has, propped up very recently as well. And this has been a continuous narrative that we've seen through cycles, but it has come back again. But leaders in the space are already preparing countermeasures. Quantum resistance isn't some, sci-fi threat that suddenly wipes out BTC. It's an engineering challenge the ecosystem is actively addressing well before it becomes practical. And that's why Bitcoin's security model, the huge, distributed hash power, uh, remains a sort of massive moat. Bitcoin's adoption isn't just about price. That's another thing. You see it in long-term holders. You see it in institutional adoption now. You see it in digital asset treasuries as well. So yes, Bitcoin remains the most foundational network in crypto because its utility, decentralized, censorship-resistant money, it isn't theoretical. It's already being used and integrated into financial infrastructure. Bitcoin is king. Now next is Ethereum. Ethereum isn't just another chain, right? It is the backbone of DeFi and the largest developer ecosystem in crypto. More smart contracts, more unique active addresses. There's more apps being built on it than anything else. Ethereum also has the most total value locked by any chain, right? Meaning the largest amount of assets are secured in Ethereum applications. And here's an interesting thing from a charting perspective. Now I'm going to go on to TradingView, and I actually want you all to see this. So let's go on to the weekly time frame, and you'll notice that the RSI levels for Ethereum have dropped significantly over the past few weeks. But if you look a little closer, the momentum indicator shows oversold conditions like this only twice before in its history. Once in 2022, when it was trading below $1,000, and once again back in 2018, when ETH was sub $100. To me, that tells you this market isn't random. We are approaching historically oversold conditions for a highly used network. Now, that doesn't guarantee anything, but it is a useful piece of context when you're thinking about risk to reward. Now, let's turn to the next chain, and that is Solana. Solana for me is a chain. Firstly, it's trading at $80, guys, and that's exactly why I'm watching it. Fundamentally, there hasn't been some catastrophic event or a change in the network. Solana is still the user chain, right? So fundamentally, everything is intact. It's widely regarded as one of the fastest and cheapest chains out there. In fact, if you look at this data here and compare on-chain activity, things like active addresses, transaction throughput, you can see that Solana leads by a long shot. If you go back to, let's toggle this on so that you can see it. There you go. By a long shot, active addresses, transactions, especially transactions, it's quite remarkable. So what I'm saying is that there's a real network effect here. There's real users, there's real activity. Prices can go sideways or even down from here. But when the underlying usage shows this much level of activity, it tells you something real is happening under the hood. And that's a crucial thing to keep in mind in times like this. Now, the next token or project is Zcash. Zcash is basically built around one key idea: financial privacy on a public blockchain. With Bitcoin, every transaction is visible. You can trace wallets, amounts, flow is on chain, and that transparency, of course, is powerful, but it also means there's very little privacy. Now, Zcash gives users the option to send what are called shielded transactions. That means the sender, receiver, and transaction amount can be encrypted, not hidden from the network, but protected from the public view. Now, Instead of every payment being completely open to the world, users have this privacy option. Now think about it. This matters because as crypto becomes integrated with everyday use, salaries, think payments, business transactions, privacy becomes more important. Most people, they don't want their entire financial history to be there on chain. That's where privacy focused networks like Zcash come in. Now, what makes Zcash pretty interesting compared to other privacy coins is that it actually has a dual system. It allows both transparent transactions and private ones. And I think this flexibility is the core reason why I would, be looking at this token right now. Some privacy coins, in the past have struggled with regulation because they are, completely opaque. But Zcash, however, can work within regulatory frameworks. So it's not privacy at any cost, right? It's actually optional privacy. So what I'm trying to say is that, in a world where regulation is actually tightening, but digital cash is becoming more common than ever before, this sort of balance really makes a lot of sense. And also importantly, shielded transactions, right, hasn't disappeared. Even in the market like it is today, a consistent portion of activity still chooses privacy, as you can see here. So whether or not the price is exciting, the underlying use case, right, private digital cash remains super, super relevant. Okay. Now, last but not least is Hyperliquid. I know this might seem a little off because most of the other chains and networks that I've discussed, they've at least been here through different cycles. But Hyperliquid is is perhaps the most high beta infrastructure play right now. Let me explain. It's within this space in crypto, within the perp dex sort of sector. And the thing is, perpetual futures are actually one of the biggest sources of trading volume in crypto. Even when prices are moving down or sideways, there are millions of people still trying to hedge, speculate, arbitrage. So this sector, in a sense, tends to stay active 24/7. Now, Hyperliquid is by far the top project in this space. It's generated massive trading volume, strong revenue relative to many other DeFi protocols. In fact, if we look at the revenue from, let's go yearly, from last year, it's reaching almost $1 billion, right? So you can see that it has generated this massive levels of activity on its platform. In fact, I would say one thing that makes Hyperliquid interesting structurally is its buyback mechanism. I'll just explain this in very simple terms. The protocol uses parts of its revenue to buy back its own token from the market. That means instead of revenue just sitting idle, it's used to create demand for the token. Now, I'm not saying that this guarantees price going up, but it does align with the protocol's activity with the entire token holders as well. So, if the exchange is generating volume and fees, some of that value flows back into the token ecosystem. Now, personally, I think in a market that's uncertain and this range bound, structures like that can matter. Again, this is not financial advice, folks. It's just highlighting how I evaluate projects, and many other analysts do. Uh, think of these core questions. Is there real usage? Is there real revenue? Uh, is there a mechanism that connects that activity back to the token? But just remember, perp dexes are one of the few areas in crypto that consistently generate activity regardless of market direction or volatility. And Hyperliquid, it has definitely positioned itself as a leader in this space. Okay, so if I had to summarize everything from today's stream, I would say crypto is definitely, definitely not broken, but it is evolving. What feels like an identity crisis today is really a transition phase. The market is no longer driven purely by internal narratives. We, as a community and sector, are deeply connected to the macro environment. And that's the truth that we all have to face. And I believe that in environments like this, the winning strategy is definitely not chasing noise or hype. It's really about going back to the basics. Focus on the networks that are building and the networks that are being used. Now, ultimately, the reality is that we are in a sideways market, but it won't last forever. And the work you put in during these times is what is going to determine how you're positioned when the momentum returns, when the crowd returns. Remember, do your own research and manage your risk properly, folks. Uh, and yeah, on that note, make sure to like and subscribe to our channel. We're going to be here through thick and thin, no matter what the market throws at us from here on. We'll be here. Uh, we're here for the long term, and we're building this community to grow together. Thank you all for tuning in to another Cryptopolitan live stream. Uh, we'll be back here again next week. So come in and check us out. Have a great weekend, everyone. I'll see you all next week.